Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, March the 9th. So happy Wednesday, happy hump day. Hope everybody is surviving this crazy market. It just continues to get a little bit more crazy every day. Today was no exception. If you see this, I'm looking at the ES. You guys know I like to start and trade. I trade the ES every day and like to start and look at that. It gives us a good proxy for the overall market. But the black area here is today's trading, the cash session. The light gray is the overnight session, and this was yesterday. So yesterday had this huge wild swing up here. It ended up coming all the way back down. I mean, this was 100 and, I think it was 120 points up and all the way back down again. And then overnight, we just straight lined all the way up here to the very end. And I had on a 4,300 trade here for the end of the day, which was the trades that I set up recently. That's one thing I'm going to stress is I'm doing super small risk for big return. I have an unbalanced risk reward on the trade. We were risking $150 on the trade to make about 2,800, and if we would have gone to 4,300 at the end of the day, we would have made 2,800 bucks. But we sold off right in the last, I don't know, 10 minutes or something like that. But we only risk 150 bucks, so no harm, no foul. Now we did that on Monday. And it was a very, very, very similar trade. I did a trade at 4,200 on Monday, right here, and we risked 150 bucks, and we made 1,300 bucks. And it was the cookie cutter same trade that I did today, except the last one was at 4,200. This was at 4,300. So they do work like that when you can get an unbalanced risk on a trade, and that's just purely the nature of structuring the trade. I did an unbalanced butterfly actually on both those trades. But anyway, that's what I'm looking for in a market like this, is to not have much risk on and try to make big rewards. We always want to do that, but in reality, the risk reward changes in different type markets. So, for example, in a more calm market, a momentum, say bullish or bearish trending market, I might risk more to make less if it is a higher probability trade. For example, I might risk 1 to make 1 or 1 to make 3 or something like that. Here I'm risking 1 to make 10, that type thing. So anyway, it's always good to keep that in mind. But let's look and go back a couple of days. I'll show you here if we go back 3 days, and again this is on the ES. That trade I did on let's see, where was it? It was right there. That was Monday. That black area is Monday cash session, and we closed right there. So again, that one worked great. This one would have. That would have been great if we would have not sold off in those last couple of minutes. But anyway, again, that's trading. The reason we sold off is the Russian delegate tweeted saying the peace talks with Ukraine will not concede anything. Russia will not concede anything, and that was at 3:49 Eastern. That's 10 minutes before the close, and boom, we get that. So, not happy about that. But again, we didn't risk much to get it. But anyway, so that's kind of what another one of the points I wanted to make here is that for me lately, this market is so kind of haphazard, whippy. We're trading. I said this in the main room today. I was like, we're not really trading the charts anymore. We're trading the news. What's going on in the Ukraine and Russia and inflation, of course, and Biden and new stimulus money and the Fed and what's going on with the dollar, what's going on with Bitcoin, all these things that move the markets around. Tomorrow we got CPI, which will be a huge thing to see if we are increasing. Inflation is continuing to increase or decrease or stop going up, maybe is a better way to put it. So keep an eye out for that. But anyway, so what I've been doing is trading. I always trade the SPX and the ES, in the NASDAQ and the RUT, that gives you a lot better way to trade a crazy market if you're trading the broad market rather than trying to pick individual names like Amazon or Google or Apple or something like that. Those have been all over the place as well, and mostly in pretty bad death spirals, to the downside. And I'm not real comfortable going in there and trying to try to catch a falling knife type thing. So I'm sticking with the indexes, and that's been working very well. Still up actually pretty nicely on the year, so that's a good thing. In this kind of market, it's been really crazy. So if we look at this, let me show you the overall thought on the market here. This is the ES again. If we look at this, and this is a very crude drawing, but you get the picture. So this is an upward channel, upward trend, higher highs, higher lows, higher highs, higher lows, and we turned. We absolutely turned right here, and now we're going lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Here's that bounce up today. So guess where our next move is? Maybe up a little bit higher, and then we come back down here. And I've been targeting this number of 4,100 for a while. I've got a trade down here that actually expires on Friday that might be a really, really good trade for me. It's a bias trade that we've got on, but anyway, I don't think this downside is over yet by any stretch. I think we could pop up a little bit higher. It's going to be sold off and come back down. And if we look at this, let's go to let's go a 5-year chart. And I'm always pretty bullish on the market. I'm never really bearish, but I think we could have some pretty significant downside if things escalate in Ukraine or drag on. We're going to have we've already got supply chain problems. They're going to get worse. Gasoline, the highest price ever, all that kind of stuff. This could drag on for a while, and it could get worse. So you got to think about that, at least on the downside, as this thing increasing more and more to the downside. And I don't want to say that, but I think that's probably more likely to happen at this point, unless this thing gets resolved very quickly, which it does not look like it's going to do. So anyway, let's get back here to our 1-year chart. If we look at the RUT, same thing here. We're trying to get something going here, trying to stop going down. The RUT's probably a little bit better than the other indexes. If we look at the NASDAQ, this just looks like a big mess. We've given back so much, over the last. This is a 1-year chart, so we're kind of back where we started almost a year ago. So again, not looking good. That's okay. We still make money. I'm still making money, and we're still trading, and we're still making money and all that kind of stuff. But your trading style has got to be different. Your time frame's got to be different. Your management style's got to be different. You've got to be a lot more nimble, and a lot more concerned about risk management and that type thing than a typical, quote unquote bullish or bearish market, so meaning a momentum market up or down. This is kind of back and forth whipsaw, crazy, Cirque du Soleil kind of stuff here. So be careful out there. I don't really have any individual names for us to look at. I'm just primarily trading the indexes. But if you want to see, how this stuff works in real time, with real trades and real money, come into the main room, the gold room with me or any of the other traders. We've got a lot of great traders, or join me in bias, and we'll check out some of these trades and go through them step by step. So other than that, limit your risk, be careful. In this market, you get your head cut off very quickly in either direction. So be light, be nimble, and watch your risk exposure. And that's what I got for us. I hope that helps. Hope it makes sense. And I'll see you guys at the next update. Thanks. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me